Ladies and gentlemen, good day and welcome to LIC's H1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have senior management of LIC led by Mr. Siddharth Mohanty, chairperson on this call. I now hand the conference over to Mr. Siddharth Mohanty, chairperson, LIC. Thank you, and over to you, Mr. Mohanty.
Good evening, everyone. I am Siddharth Mohanty, chairperson LIC. I would like to welcome all of you to the half-yearly results call of the financial year 2023-24. As you are aware, we declared our results a few hours ago today, and we have also uploaded the detailed results press release and the investor presentation on our website, as well as the websites of both the exchanges, BSE and NSE. Along with me on this call, I have four managing directors, Mr. M. Jagannath, Mr. Sablesh Pandey, Mr. Satpal Bhanu, and Mr. R. Doraiswamy. Senior officials of the corporation present on this call are Mr. Dinesh Pant, appointed actuary and executive director, Mr. K.R. Ashok, executive director from the actuarial team, Mr. Sunil Agarwal, CFO from the finance team, Mr. Ratnakar Patnaik, executive director, investment front office and CIO, and Mr. K. S. Giridhar, executive director, investment back office from investment team, Mr. R. Sudhakar, Executive Director, Marketing and CMO, Mr. Hemant Buch, Executive Director, Bank Assurance, Mrs. Manju Baga, Executive Director, Group Business, Mrs. Anjuvala Purushottam, Executive Director, CRM, Claims, Annuities, Mrs. Rachna Khare, Executive Director, CRM, Policy Servicing, and Mr. Sanjay Bajaj, Head, Investors Relations. Before I start explaining the highlights of the business, I would like to thank you all for making time to attend this call late in the evening on a very auspicious day of Dhanteras. I wish you a happy Dhanteras. Secondly, I wanted to update you that starting this results presentation, we will be providing the APE breakup of various segments within the individual non-par business. Historically, we have presented only the NBP breakup of the non-par segments in the individual business. However, since many analysts have asked us to add the AP breakup in our disclosures, we are providing the same from now onwards. Now let me start with an overview of the business and the financial performance. Premium income. For the 6 months ended September 30th, 2023, we have reported a total premium income of INR 2,05,760 crore as compared to total premium income of INR 2,30,456 crore for the 6 months ending September 30th, 2022. The individual new business premium income for 6 months ended September 30th, 2023 is INR 25,184 crore, and for the corresponding 6 months of last year, it was INR 24,535 crore. Renewal premium income, individual business for 6 months ended September 30th, 2023 is INR 1,09,599 crore as compared to INR 1,03,203 crore for 6 months ended September 30th, 2022. The group business total premium income for 6 months ended September 30th, 2023 is INR 70,977 crore, comprising new business premium of INR 67,505 crore. In comparison, for 6 months ended September 30th, 2022, Last year, group business total premium income was INR 1,02,718 crore and comprised new business premium of INR 99,707 crore. Therefore, for this 6 months ending September 30th, 2023, our total premium income has registered a decline of 10.72%, while the total individual business premium has grown by 5.52% as compared to similar period last year. However, for the 6 months ended September 30th, 2023, the total group premium has decreased by 30.9% as compared to similar period of the previous year. Our market share by first year premium income for 6 months ending September 30th, 2023 is 58.50% as per IRDA, and we continue to be market leaders in overall life insurance space in India. For 6 months ended September 30th, 2023, we have a market share of 40.35% in individual business and 70.26% in group business as compared to 42.31% in individual business and 80.34% for similar 6-month period last year. While the market share in individual business is relatively stable, there has been a larger impact in market share of group business. We still continue to be market leaders both in individual as well as group segments. The group business has a cyclical nature and certain flows are bulky and therefore has potential to cause variations in market share, and we are confident of addressing the same through various initiatives. Seen on AP basis, the breakup of business is as follows. Total annualized premium equivalent APE for 6 months ended 30th September 2023 is INR 22,627 crore, which is comprised individual AP of INR 14,638 crore and group AP of INR 7,989 crore. Therefore, on AP basis, individual business accounts for 64.69% and group business accounts for 35.31%. Further, of the individual AP, the par business accounts for INR 13,063 crore and non-par amounts to 1,575 crore. As you can see, our non-par share of individual APE is 10.76% and par is 89.24% for 6 months ended September 30th, 2023. You will recall that our non-par share for similar period last year, that is 6 months ended September 30th, 2022, on APE basis within the overall individual business was 8.98% and the AP was INR 1,315 crore. Therefore, the AP of non-par business has increased by 19.77% on year-on-year basis. Our product mix strategy is on track and we are moving ahead in a consistent manner towards a more balanced and value-enhancing product mix in our business portfolio. Profit after tax. The profit after tax for the 6 months ended September 30th, 2023 was INR 17,469 crore, which comprises an amount of INR 13,768 crore net of tax pertaining to the accretion on the available solvency margin transferred from non-par fund to shareholders' account. At this point, I would like to mention that we had changed the accounting policy in September 30th, 2022 regarding transfer of accretions on ASM in the non-par fund to the shareholders' fund. As you will recall, the change was effective from January 2022 when our fund bifurcation had taken place, and therefore the PAT figure for 6 months ended September 2022 included an amount of INR 4,542 crore net of taxes, which was for the quarter of January to March 2022. Indian Embedded Value, IEV. The Indian Embedded Value as on September 30th, 2023 has been determined as 6,62,605 crore as compared to 5,44,291 crore as on September 30th, 2022. Therefore, IEV has registered an increase of 21.74% on year-on-year basis. VNB and VNB margins. Net VNB is INR 3,304 crore and net VNB margin is 14.6% for the 6 months ended September 30th, 2023 as compared to INR 3,677 crore and 14.6% respectively for the 6 months ended September 30th, 2022. Solvency ratio. The solvency ratio as on 30th September 2023 improved to 1.90% as against 1.88 on September 30th, 2022. Asset under management. Asset under management as on 30th September 2023 was INR 47,43,389 crores as compared to INR 42,93,778 crore as on September 30th, 2022. Therefore, our AUM has shown a growth of 10.47% on year-on-year basis. Product mix and new product launches. Now, I would like to inform about new product launches. In line with our strategy of increasing the proportion of non-par business, we launched 3 new non-par products. 2 for individual business, namely LIC's Dhanvriddhi and LIC's Jeevan Kiran, and 1 for group business, namely LIC's Group Post-Retirement Medical Benefit Plan during the 6-month period of April to September 2023. Number of policies and agency workforce. During the 6 months ended September 30th, 2023, we sold 80,61,000 new policies as compared to 83,59,000 new policies in 6 months ended September 30th, 2022, a year ago. As on September 30th, 2023, the total number of agents was 13.46 lakhs as compared to 13.35 lakhs as on September 30th, 2022. The market share by number of agents as on September 30th, 2023 stands at 49% as against 53% for September 30th, 2022. On number of policies sold basis, the agency force sold 77.68 lakhs policies during the 6 months ended September 30th, 2023. Therefore, approximately 96% of our policies in the 6 months ended 30th September 2023 were sold by our agency force. Even on premium basis, a little above 96% of NBP came from our agency channel in the first 6 months of current financial year. Contribution by banca and alternate channels. During the 6 months ended September 30th, 2023, other channels, banca and alternate channels contributed to 2.12% by number of policies and 3.42% by new business premium. For the 6 months ended September 30th, 2022, the banca and alternate channels contributed to 1.73% by number of policies and 3.37% by NB premium. This year, in the first 6 months ending September 30th, 2023, we collected a new business premium of INR 858.55 crore via this channel, as against 825.37 crore in the comparable 6 months period last year. Therefore, as you can see, we grew by 4.02% on year-on-year basis in the banca channel when measured by new business premium. Further, we sold 1,70,751 policies and we grew by 18.33% in B&AC channel in this 6 months as compared to similar period last year. The positive improvements in both premium income and the number of policies sold through banca and alternate channel is a pointer towards progress of our another key element of business strategy, which is diversification of channel mix. Our overall expense ratio for the 6 months ended 30th September 2023, our overall expense ratio is 15.14% as compared to 16.69% for the past 6 months of last year. Persistency. On premium basis, the persistency for 13th, 25th, 37th, 49th and 61st months up to 6 months ended September 30th, 2023 stands at 78.49%, 71.98%, 70.16%, 64.57% and 62.53% respectively, as compared to 77.62%, 73.84%, 67.85%, 64.73% and 62.77% respectively up to the 6 months ended September 30th, 2022. On number of policies, the persistency for 13th, 25th, 37th, 49th and 61st months up to the 6 months ended 30th September 2023 stands at 66.80%, 58.79%, 57.61%, 51.73% and 50.35% as compared to 65.21%, 61.60%, 54.93%, 52.46% and 51.61% respectively up to the 6 months ended September 30th, 2022. Therefore, while we make efforts to improve persistency across cohorts, during this past 6 months of this financial year, we have seen improvement in persistency on both premium and policy basis for the 13th and 37th month. Operational efficiency and digital progress. In our digital initiative through the agent-assisted Ananda app, we have completed 5,33,393 policies through this app during the 6 months ended September 30th, 2023 as compared to 3,14,955 policies for the period ending 30th September 2022, thereby registering a growth of 69.35% on year-on-year basis. This entire push of using technology and digital innovations more effectively to enhance the business and our efficiency is another large element of our strategy as we move ahead to creating better value for all stakeholders through focused profitable growth. I am happy to share with you that our digital transformation focused on digital innovations and value enhancement is an area of focus currently. Claims. On the individual claims front, during 6 months ended September 30th, 2023, we have processed 86,40,598 number of claims, which includes 82,40,947 maturity claims. On an amount basis, during past 6 months ended 30th September 2023, the total maturity claim were INR 78,984 crore and total death claim were INR 10,826 crore. On a comparable basis, for first 6 months of last year ended 30th September 2022, the maturity claims were INR 72,988 crore and death claims were INR 11,665 crore. Therefore, the death claims are lower by 7.19% and the maturity claims are higher by 8.22% on a year-on-year basis. Before I conclude, I would like to thank all our shareholders, policyholders, agents and employees for their faith and trust in us. Before we take up question and answer, I would request our CFO to explain the PAT breakup. Sunil Agarwal, CFO.
Good evening. Thank you, sir. Good evening, everyone, and wish you a very happy Dhanteras. First, I'll explain the breakup of the quarter-on-quarter PAT. The PAT of rupees 15,952 crores as at 30th September 2022 comprised of 3 quarters of ASM income, available solvency margin income, because we had changed our accounting policy during that period, and the accretion started from quarter 4 of FY22. So therefore, it comprised of 3 quarters ASM income. So quarter 4 FY22 income was 4,542 crores. Quarter 1 FY23 income was 4,149 crores. So if we remove these amounts, the balance amount for the quarter, which actually pertains to quarter 2 of FY23 is 7,261 crore, which is a comparable figure with our current quarter 2 results, which is 7,925 crores. So therefore, the PAT, there is an increase of 9% if you look at it on a quarter-on-quarter basis. Now coming to half-yearly disclosure. Half-yearly, the PAT shown for last year was 16,635 crores, which comprised of 3 quarters, out of which if we remove the quarter 4 of FY22, which is 4,542 crores, the PAT pertaining to H1 of last year is 12,093 crores as against the PAT of 17,469 crores of this year. Therefore, a growth of about 44% when you compare it H1 basis last year. Thank you so much.
So thank you. And lastly, I wish all those present on this call very happy and prosperous Diwali and festive season. I now request the moderator on this call to open the floor for the question and answer. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Avinash Singh from Emkay Global. Please go ahead.
Yeah. Good evening, sir. Wish you all a very happy Diwali. Few questions. The first one is on your, accounting P&L employee expense part. That has had a lot of volatility due to some kind of a bonus and provision. So if I read correctly, nearly, 500 crores a quarter you are providing for that, pension, that was approved, I guess FY20 or somewhere around 11,000 odd, spread over 20 odd quarters, meaning 500 odd crore per quarter. additionally, there is something more that, the change in the family pension that has led to another, I guess, close to 11,000 odd crore, where you have, I guess, taken close to 2,900 odd crores of hit in this quarter, if I read correctly. So, can you sort of break up, your employee cost that, okay, what sort of a cost is kind of your wage and related run rate, and what sort of other provisions you keep doing? Because there is a lot of volatility in employee cost, and given that you're kind of a stable employee and also the wage revision happened, if you can just provide some sort of a color on this employee cost mark. So, that is one. And second is around more to do with, now, as you have changed your accounting policy related to non-par surplus being transferred to shareholders' account, and of course your profitability remains good, as well as solvency is accruing because growth overall is not that strong. In that backdrop, can there be some clarity around what is the sort of a board mandated floor on solvency? And as long as you are comfortably with that, what sort of dividend can you pay out? Because given that, okay, the accounting profit generation is pretty good and solvency is gradually increasing, so there should be some kind of a more clarity on the dividend side because the growth is not that strong. So these are my two questions. If anything, I will follow.
So if you see employee cost, actually because of family pension, so that was allowed by government, so we have to provide for that. So detail Mr. Dinesh appointed, actually you can elaborate a detail employee cost because of actual valuation also we are doing.
Yeah, see, this on employee costs, I didn't get the question very clearly, but to my understanding, what you're talking about volatility, I think we keep on providing for it as and when it comes. On the pension cost you mentioned about it, the regular cost is always funded. It is, we follow IAS 15 for that thing. Sometimes there are one-off costs. Then those also, if a differential treatment is to be considered, that's based on the approvals as is required based on that thing. For example, like this family pension is being talked about. As far as the dividend is there, of course you would have seen last year it was increased from 1.5 to 3. Yes, our target always is 1.6. We are very comfortable, and in fact the solvency ratio only inched upwards. Of course the board will take appropriate call for balancing the interest of all the stakeholders, depending upon when the distribution decisions comes about. Yes.
So, sir, on employee cost part again, if I look for this quarter, so 2,900 odd crores you have provided for the family pension, and there is sort of a 500 odd crores kind of a run rate for that initial, the pension part that was taken in FY20 or something. So these two are kind of a one-off. And what has been a sort of a, adjustment or kind of additionally provided for the pension part with the actual evaluation? To just get an idea, because last quarter, of course, you have a number closer to, I guess, 5,700 odd crores. This quarter is going to 10,000 odd crores. And of course, I can differentiate this 2,900 is one-off. Still, it's like, higher than last quarter by another 15 odd. So what has been a sort of, adjustment in that actual liability towards pensions?
Yeah, as you have seen, around 2,600 some figure has been provided for the additional pension liability, which has, already accrued to the pension, the family pension holders of the corporation. For them, their benefit has straight away increased. The other portion which possibly you're talking about was the one-time pension, pension option which was given few years back, which was amortized over a period of, which was taken over a period of 5 years as per the decision in that regard. So these are two components, and besides that, you would be aware that these pension costs are, always provided for the vested benefit, and then there is a current benefit each year. So as the service goes on, that is to be provided. So for the vesting period, plus if any additional service for that also is to be provided as per the standards in this regard.
Okay, thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Sanjeev Kumar from SKD Consultants. Please go ahead. Sanjeev, may I request you to unmute your line and go ahead with the question, please?
Okay. Am I audible?
Yes.
Yes, please.
Oh, thank you. Sir, actually, very good set of numbers you have produced for this quarter. So congratulations for that, and very warm greetings for the Dhanteras and Diwali. Sir, my basic concern is that, despite all this good performance, our share price is not performing, and our issue price has been very high, and now the prices have gone down. So I just want to understand that what management is thinking about it, how to reward shareholders, how to recoup the losses of the shareholders. This is my question, sir.
Yes, share movement is a function of many things. As management, we are committed to create shareholders value, and in that direction we are working. As you see, our non-par share is going up, and also margin, though this quarter it has been steady, objective is it must improve also. It will improve in coming quarters. From our side, whatever is required to create a shareholder value, that we are doing. Other things are left to market. And people actually, many people, when it went down, it went up to I think 500, something like that. And many people also made good money. They bought in large quantity, and so we are concerned with our performance so that value is created.
I agree. But sir, sir, that a lot of private sector competition is also coming, and the growth rate of private companies seems to be faster. So, in light of all this, how we are going to reorient ourselves and, create value for the shareholder. I mean, this is what I would like to again request you to please keep in mind and come out with some sort of innovative ways where you reward shareholders and the value is increased. That is all I want to say, sir. Thank you very much, sir.
Thank you. Actually, I can just share, if you have observed our performance last 1.5 years post-listing, there has been directional change in our approach with regard to product mix, channel mix, and digital intervention. All these three areas, we are on the right track. Result is yet to come, total result, it takes time, but I can assure we are on the right track. So that will definitely create confidence in the market, and let us see.
And one more thing, sir, that the value of your investment is rising like anything, because historically LIC have been a very old investor on the stock exchange of India. Right. So you are the best beneficiary, or highest beneficiary of the rise in the market. So how to share prosperity, this also can be thought of.
Yes. All our stakeholders will benefit from that.
Okay, sir. Thank you. This is all from my side. Thank you.
Thank you.
Thank you very much. Next question is from the line of Swarna Mukherjee from B&K Securities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. I have 2-3 questions. So first one, on the VNB walk that you have provided, if you could explain what happened in the impact of the product benefits that resulted in offsetting our benefits of the product mix improvement, and vis-a-vis last year 1H, you also have shown a positive impact coming from assumptions. So has there been any assumption change in this current quarter which is driving that? If you could highlight that. That is the first question. Secondly, sir, I think from last few quarters, your commentary and your product mix kind of outlines are focused on the non-par side. But when I look at the persistency ratios, despite the mix moving slightly towards the non-par side, the persistency numbers haven't seen any improvement. So just wanted to understand, is there any challenges pushing this product, or why is the persistency numbers dropping? And also, while the persistency numbers look lower vis-a-vis last year, first half with most cohorts, there has been an improvement in the 37th month, both by number of policies and premium. So if you could explain what is different there in that cohort which has resulted in that improvement. These are my questions.
Good evening. I'm Ashok, Executive Director Actuarial. I'll be taking the question on VNB walk. We have already disclosed the breakup of the walk. Actually, there are some components which are mentioned. One is the impact on business mix. You must have noticed that we have moving and on the trajectory towards non-par businesses, and our non-par proportion has increased. Actually, this has resulted in showing a positive movement in the VNB margin. And regarding the product benefits, we have to have our products in a competitive market. We have to have our products priced competitively. And because of when we price the products competitively, then it has a negative impact on the margins, because if you notice that any increase in benefits policyholders will have a reverse impact on the margin. And regarding the assumptions, actually the main impact is due to the risk-free rates going down compared to September 22 year on year, and that has resulted in movement towards a negative movement. And simultaneously, we have also observed that there has been a very good improvement in the mortality improvement in the group business, group term business, and which has made the margin move in the opposite direction. So the net effect is the margin as at 30th September is 4.6%.
Understood, sir. So, just follow up on that. So the increase in product benefits, is it on the group annuity side or also on the individual side? If you could maybe give details on which categories of the product you have taken this add benefits.
Actually, the product is we have replaced the annuities, so that has resulted in there's some bigger impact on the movement of margin.
Okay, on the group side or sir, overall, I mean individual also?
But individual, both are in a way related. So whenever we reprice the margins for the individual, the group margins are also getting affected.
Okay, sir. Understood. Very helpful. If you could address the persistency related question, please.
Persistency, if you see, it has actually improved. 13th month, if you see, 13th month persistency, as against the 77.62%, it has gone up to 78.49% in premium. And in policy also, as against the 65.21%, last year it is 66.8%. So persistency there has been some improvement in initial period. Of course, subsequent months up and down both are there, but initially it is showing some improvements.
Just to supplement that, actually you are aware that persistency is measured on the cohort-wise basis, right? So, the decisions which you just mentioned about, like non-par business, which has been become the focus for some period of time, and post-cycle the decisions which have been taken to modify the product, reprice the products. For example, a decision which has been taken a year back would start to show the results at the end of the 1 year, because entire 1 year cohort has to be considered, it has to be given a period of 13 months, and thereafter it is measured. So typically 13 months is the most proximate way to look at the recent decision, and 60 months needs to show the long-term view. In between, the behavior which is there is because of those cohorts which have been done in the preceding years. So we are sure that the effective decisions which have been taken in the year between 22 to 23 will actually, the outcomes of that will be very visibly seen when we go near to the end of this year.
Understood, sir. Very helpful. Thank you so much, and wish you all very happy Diwali.
Thank you.
Thank you. So happy Diwali to you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Udit, individual investor. Please go ahead.
Hello, sir. Thanks for giving me a chance to ask a question. My question is on the embedded value. So there's a significant increase on the embedded value compared to last year. And from 2021 to 22, there was a very small variance. So my question is, can you explain what has led to such a big increase? And over the next few years, how will you maintain stability on the embedded value?
This is Ashok. See, actually, you must have noticed that embedded value is a conscious, it's an outcome of the conscious efforts that the corporation take in this regard. And the major component of the embedded value is the unwind, because basically we are high on the savings product portfolio. And therefore, this component is the biggest component in the embedded value group. I think I have answered your question.
Thanks, sir. And I just have one more question on the group premium. I think there's a 30% drop. You did mention that it's a cyclical business, but is this something which you're planning to recover that market share over the next 6 months, or what will be the period that you are planning to recover that drop in the percentage?
Good evening, this is Raiswamy, my managing director. See, the group funded business is bit cyclical with the employee benefits valuations which are being done by the company, and based on that, some funding also gets happen and with new schemes being introduced. We are trying to recover whatever is the degrowth or whatever we could not correct in the first half during the remaining period of the current financial year, and we hope to be showing a good growth over it by the end of the year.
Thanks, sir. Thanks for answering my question.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah. Hi, good evening, sir. So there's a couple of questions. Firstly, on the group business, is there a significant increase in competition from private players and because of the expense of management regulation, and that is the reason there is a much sharper decline for us in the group business, and because of which we are losing out? Is that the case?
Again, Raiswamy here answering. You can't ascribe it to that. It's not that the premium that should have come to us has gone to any competitor on that, though competition is felt in every sphere of our business activity. And that's a continuous thing which we have been meeting. But this degrowth or this impact that we are seeing the current year cannot be ascribed to the increased competition. Yes, the expense of management regulation and the relaxation given in terms of commission is a tool which is being made use of by other companies, but it has not directly resulted in this kind of a dip, which we have already explained, and we are trying to get it back as quickly as possible.
And considering the expense of management ratios, are we reconsidering our commission ratios? Have we changed the commission ratios on any of the products or agents, or what is the thought process?
It depends. It will depend on product to product. Whenever we design new product, depending upon market dynamics, need of people and all those things, we will decide at that point of time. Since UMA is such, regulator has given UMA, so that leverage also will take.
Got that. And so lastly, the agency channel had a very high share of, I think relatively to other channels, agency has a good share of 5 lakh plus ticket size. And we have so many MDRT agents and COT and TOT agents. How has been their experience in the first half after the tax changes? And do you think that more understanding of the tax regulations will allow the agency channel to kind of improve the growth in the second half?
This is Sudhakar, Executive Director Marketing. As such, even in the current year, if you look at it, the ticket size has actually increased across the various product categories as compared to the last year. The impact of 1010D of the March is not so much significant in the current year also, and we are expecting to cover that up in the coming months without much of a difficulty. The ticket size per se in all the plans as well as the new plans which were introduced in the current year, like Dhan Vritti, has been quite significant. It is more than 2 lakhs per policy. So,
sorry to interrupt you. It's sounding a little distant.
It is louder.
You want me to repeat it?
Yes, sir. Your voice was too weak to understand it.
I am Sudhakar, Executive Director Marketing. I mentioned that the ticket size of all the plans which we have sold in the current year are significantly larger than that of the previous year. If you look at the overall ticket size also, there has been considerable improvement. This is because of various changes and modifications we carried out in the last year in certain plans by raising the minimum sum assured and minimum ticket size in some of the plans, as well as encouraging more of annuity business, which has got a higher ticket size component. The growth of annuity business is contributing to higher ticket size now. And similarly, a new product which was launched in the current year, Dhan Vritti, which has got a ticket size of more than 2 lakhs, is also helping us to increase the ticket size and compensate for whatever ticket size impacts which will be there because of the March business.
Thank you so much. And just lastly, one more question. Could you reiterate that, restate the impact of benefit product mix on the VNB walk? Could you just restate that?
Yeah, this is Ashok. Actually, what I was mentioning is, when the benefits are being enhanced in some of the products, particularly the annuity products, there is a downward pressure on the margin. So that is what is getting reflected in the VNB.
Okay. So you're saying your annuity rates have been increased, and because of which the margins on the non-par products have come down, and that has impacted the overall VNB margins.
Actually, one thing we need to have clarity is basically these products are highly competitive in nature, and we have to be dynamic in looking at the market movements and accordingly price the products. And we have been doing that continuously, and that will have an impact on the market.
Got it, sir. Thank you so much. And all the best.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Supratim Datta from Ambit Capital. Please go ahead.
Hi. Thanks for the opportunity. My first question is, on this call previously you mentioned that, how you have been investing in alternate channels and banker channels and growing those channels. But if I look at the numbers, it looks like the second quarter individual NBP source through the banker and alternate channels has declined by around 2%. So if you could talk about, what is driving that decline. So that's the first question. The second question is, I wanted to understand within the non-par, how much of that is coming from the banker and alternate channels versus agency. And a third question was on the embedded value walk. And now, could you let us know what proportion of this increase is coming from economic variance? That's the third. And finally, on the annuity piece, I just wanted to understand what proportion of your annuities will be coming from PSU employees versus non-PSU employees. Thank you.
If you see banker channel, we have shown already more than 18% growth in number of sales, and the premium wise 4% plus. So it is growing. The share is also more than 3.37% share to total premium banker. I would request our ED banker can give for
So I was just talking about the second quarter. So if I look at the second quarter, then there is a decline of around 2%.
Yeah, this is Hemant, who's Executive Director of Bancassurance and Alternate Channels. Second quarter, if you look at the numbers, basically, I would see it from a different perspective, like to present it that way. Typically, if you relate with the experience with the bankers, since the NIM pressure was there and the cost of deposit also was going on, there is a rush still in the continuing to shore up deposits by the bankers. This has affected to some extent our single premium business. And to that extent, the numbers have been corrected or lowered when it comes to single premium contribution from the banker channel. But the regular premium contribution has shown a very decent growth, almost to the tune of 37%. So net-net, when we compare, of course, it looks as if in fact volume to volume absolute numbers, there is a slight degrowth in the quarter two numbers. But overall, when we see the business mix on the WRP side or on the AP side, the growth remains steady, stable, and now that we are entering a positive kind of an environment starting H2, numbers will improve here on, and both regular as well as CFPM products will continue to do well, and we are confident of putting up a better show quarter after quarter.
Got it.
Regarding the embedded value, particularly the MTM component you have been referring to, actually the MTM proportion of the total embedded value stays flat at around 50%. Though there has been a growth in the MTM of 22% year on year.
So just to clarify, 15% is what you mentioned?
Yeah, close to 50%. Yeah.
Got it.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Udit, individual investor. Please go ahead.
Thanks, sir. So my question is on the product mix. There was a discussion on the composite insurance license. Any progress on that? And with the millennials, a very good target for insurance, do you think over the next years you are looking for a new product mix with combined life insurance with health insurance and other policies to come in?
Yeah, actually, we realize and we actually really understand this thing that, when product offerings are concerned, we have to look towards a trajectory in which, product offering should be like solution to the entire, basket of their requirements and needs. So typically, as of now, currently, what is available for life insurance companies is to work in the area of on the market side of ULIPs, on the, long-term perspective, future planning, post-retirement type planning through annuities. Then through we are allowed to have fixed benefit, health products also. And besides that, we have got risk cover plans also. So currently, when the product offerings are given as a solution to the customer, a basket of such, products, mix of that is considered, so that is solution there. Going forward, when a call is finally taken, to what extent, the cross-selling between insurance companies or composite license call is taken, allowing, all those, in fact, insurance products or financial products being allowed there also on the card. So all those things will be integrated as and when it comes. Currently, even in fact, some of the products are already being, through Bima Vista coming from regulatory side, already, multiple components of health, accident, and life insurance cover, all are being taken. So we are very conscious of it. In the current scheme of things, whatever is allowed to us, we are trying to, integrate all those things to provide as close as, a life cycle solution we can provide to our customers. And going forward, when the regulations change or larger participation is allowed, that will also be integrated into our processes and product offering.
Thanks.
Thank you.
Thank you. Next question is from the line of Nischint Chawathe from Kotak Institutional Equities. Please go ahead.
Hi, thanks for taking my question. The first one is really on the embedded value. We have seen a significant increase in the first 6 months. Would you kind of say that a large part of it is because of, capital market movement?
Just one clarification is important to have, as you see. One, it's very heartening thing that, in case of LIC, this on 1-to-1 year basis, this its embedded value growth of around 21.7% is perhaps one of the best we are seeing around at this point of time. Yes, a large contribution comes from the equity component to it, but it is also important to note that even actually the performance of the core business has also significantly contributed to it. So actually the growth rate from core business would be even better than what has come from the this thing. In fact, if we look into the March to current change in embedded value, in the return, what we typically call return on embedded value in operating terms, is almost on annualized terms something around 11.8% or so. So this is, all these factors contributing, whether it is adjusted net worth, whether it is the core business contribution coming through PVSP or through the market value gains, all have contributed favorably. That is why this 21% plus sort of growth in embedded value, which is very, very robust for such a high volume base, such a big base, has come out.
Thanks. The next question is, on your AP disclosure, and thanks for this. At the time of IPO, we said that the focus will be to kind of increase non-par savings, and that kind of improves margins over time. But I think almost like a year down the line, we are still at just barely not even 400 crores of non-par business. So I was curious whether there is any marketing or any active marketing of these products done at all. And even on the protection side, I know you have changed your pricing, but all that we are doing is something like just around 80 crores of protection. So are these products actively marketed by the marketing team? It's such a large army, but the numbers are 1 year down, or in fact more than 1 year down the IPO, and the numbers are still negligible.
If you see the total volume, it will appear negligible because we are new to this and our agents have been trained to sell all these products which are in the interest of customers as well. And if you see, it has also improved. AP share of non-par has gone beyond 10%, which was 8.99 1 year before. And total premium also some 39% non-par. So that is also there. So consciously there is effort to promote non-par not only for the interest of shareholder but also policy holders. And all the products which we have launched, those are getting traction in the market. But as you told, a lot has to be done. So that we are on that, working on that.
And a related question is, if I look at the gross margin on the non-par side, it appears to be, kind of a little. It is a pretty high margin. So is there a scope where you can, probably, offer a little bit more to the customer and maybe gain more market share?
Actually, that's an interesting call which as an insurer we have to take. When you start with margins, we started with high margins. Then you have to also see ultimately, we have to work towards the value of new business itself. So it's a balance between what margin and elasticity of that to the volume of sales which happens. That is what you have seen, for example, what was being told earlier in a competitive, out of competitive consideration in annuity business, the margins were reduced because the benefits have been significantly improved. In fact, some of the annuity products of our deferred segment are the best returns to the policyholders. So there naturally the growth has happened, but if that growth does not compensate for the loss in margin, for some time till that comes about, there will be setback on the VNB. So this is a process in which we continuously consider shareholders' interest, policyholders' interest, overall business dynamics, and where we want to go about it. So yes, we have already improved our benefits as we are saying. We continue to offer products which have good VNB margins or reasonable margins for a period of time, ensuring that the volumes on that business also comes about. So that's what actually is linked to your previous question also. This shift is a little time taking because all the people who are involved have to be involved into that process. But once that momentum picks up, this outcomes will start to be seen. Already this 10.8% shift, if you actually would have looked, it's almost double of what would the proportion a year back. So this is a significant change which is happening and will continue to be in that direction.
And sorry, I kind of dropped off in between, but did you kind of highlight any specific reason for lower gross margins in the par business?
For the par business? Your question is on the par business?
No, I'm saying that decline in margin in the par business, have you assigned any specific?
There's no significant decline in the par business for sure. That has almost been stable. right, there's no significant change in par business because that contributes only 10% towards VNB, right? What has happened is that growth in par business has been less because of the possibly, market conditions, carryover effect from the last quarter of the previous year in the initial 2 quarters. So that will also be made good. The driver of the VNB margin will be not the par business. That will be continue to be important contributor in the overall VNB. But for VNB margin, the contribution will largely come from the non-participating business.
I believe you have regrouped, I think, some of the numbers on the margin.
You didn't get what is the question?
Sorry? I believe you have regrouped some of the numbers on the margin.
Degrowth?
Regroup. If you look at the first half presentation for last year, your VNB gross margin you reported is 14.5, while I think the same number for previous year this time around you reported as 15.8.
No, for September period last year actually it was 14.6, remains 14.6. Last year it was 14.5 to be precise, and 14.61 this year, but on the rounding effect it is 14.6, both comparable quarters.
See, one more point is, if you look at the disclosure, we are now declaring net margin. So I think you are comparing these numbers with the gross margin. So
previously it was gross margin. Net is saying 14.6 last quarter September 22, 14.6. In fact, it is 14.61 to be precise as compared to 14.58 last year, but we round it as effective, so it is 14.6.
Sorry, that was my error. Thanks for pointing out.
Welcome.
Thank you very much and all the best.
Thank you.
Thank you. Next question is from the line of Amit Jain from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for taking my question. So I had a question on the banker channel that you are incrementally focusing on. So is it purely on the PSU banks that you are focusing on, or are you in talks with the private banks as well? And secondly, what are your thoughts on fintechs as a channel? So do you have any thoughts of incorporating any fintechs to increase your proportion from the other channels? So any thoughts on that would be helpful.
Hi, this is Evan with Executive Director Banker. We have very good presence of both private as well as PSB. Mainly, of course, the PSBs are partners here. But major contribution, of course, are given by few PSBs and one private bank. Coming to the other part of the question, but at the same time, this is a dynamic kind of an environment, so we will continue to strive for having more partners, both from private as well as public sector banks. But public sector banks face almost, I think, we have to touch almost everybody, except for people where they are in a dedicated kind of relationship. So we will keep exploring, as and when there is an opportunity, we will definitely get them onboarded. Coming to the fintech side, yes, as other corporate agents, we are looking this space with a lot of excitement. And we have already added in the 3 fintech companies as the corporate agents in the current year till now. Of course, with the integration scheme and other things being tested and being put in place, the actual business flow will start kicking in maybe from this quarter onwards. And that will contribute to the set of numbers when we present it for Q3.
Sure, sir. Thanks. That's very helpful. And secondly, in terms of margin, so just coming on the non-par business, the margin decline that is 68.7 to 50%. So I just wanted some further clarity as to why. Is this only because of pricing, or is there any other thing out here that has led to a decline in margins in the non-par business?
See, actually, if we look at the non-par margins, the major impact of our reduction in margin is the repricing. There is also another impact due to the changes in the risk rates. But then, yes, the major movement is due to repricing the non-par products.
And so on a sustainable basis, so H2 margins were at 14.6%. So for a full year, do you envisage that these could go up closer to 15%, or like 14.5% to 15% is the range for this year? And incrementally, how are you seeing your margins when you move on to FY25? Any thoughts on that?
See, ideally, we focus mainly on assisting that our focus has clearly shifted towards non-par products, and the non-par products is giving a quite a decent margin. And as the focus is towards more and more non-par products, we can expect the margin to go north.
Sure, sir. That's very helpful. Thank you.
Thank you. Next question is from the line of Dipanjan Ghosh from Citi. Please go ahead.
Hey, hi. Good evening. Hope I'm audible. A few questions from my side. First, on the agency front, given that you are shifting your focus towards more of non-par, over the last, let's say, 12 to 18 months, have you seen any change in the activation rate of agents or in terms of the productivity of agents? How do you see that? I mean, barring the ticket size, which obviously has been on the upward trajectory. How have you seen the activation rate, or in terms of the new agents, in terms of how their productivity or churn is kind of shaping up? Second, in terms of the non-par business, is there more repricing in any of the product segments or annuities that you have kind of forecasted, let's say, going into the second half out there? Third question would be in your non-par savings business, individual non-par savings business. Can you give some color on whether it would be single pay or regular pay mix, or what would be the average tenor or something out there? And lastly, in terms of your group business, you mentioned that you would try to recoup some of the business that probably did not come through in the first half in 2H. I just wanted to get some color on what are the strategies that you're kind of adopting out there, and how confident are you on recouping the businesses for the second half?
This is Sudhakar, Executive Director Marketing here. On the agency side, yes, we have about 1.3 million agents, and training them into the non-par, which is a new line of business as far as they are concerned. We take the more senior agents to train them, because they are already selling, having a higher basket of products which they are selling, and they understand much better also. At the same time, when the new agents are being added also, we are teaching them one or two of the non-par products, especially on the savings side. And that is how the overall percentage of agents who are selling non-par over the last year, it has increased by almost around 3 to 4% as compared to the corresponding period of last year. So the overall total non-par business also, as you can see, there is an increase in the individual savings by almost 172%, on the individual non-par 19%, and annuity by around 9.95%, and so on. So that breakup is also been given by us. ULIP is also showing growth. So it takes some time, because of our organization, for all agents to come on board as well as understand, as well as start selling the products. So mainly it will be more senior agents who are understanding the product and are able to convey that to the customers.
On the product side, see, in the past sometime we have repriced our product. And just for a clarification, when we say overall, VNB margins have come down in consciously because of competitive reasons in non-par business. It is not across all lines of businesses. In certain products where we have repriced the product, particularly protection business, the margins have improved also. Similarly in other lines of businesses also. So it's a conscious call depending on the balance of the business. Going forward, our aim is to have our product basket complete, provide and facilitate our intermediaries as well as the clients all the product offerings as per their life cycle requirements, and we are very confident that is going to yield very good results in the coming quarters within this financial year and thereafter also.
Sure. My two other questions was one on the non-par mix, individual non-par mix, if you can give some color on the type of product between single or regular pay, average policy tenor or something. And the last question was, how confident are you on recouping the group business in 2H, and what are the incremental strategies you have adopted for that?
Again, Sudhakar here. On the non-par side, approximately 25% of our business comes from the annuity portion, annuity basket, and it is continuing to hold the same position. as of last year. Apart from that, we have added some savings products in the current year, which are both available as single as well as non-single. So annuities are of course single, but under the individual savings, we are adding both single as well as non-single premium paying modes. And there also the Dhan Vriddhi, which is mainly it is a single premium product. And we have also added Jeevan Kiran, which is a return of premium product, which is added at the later end of the second quarter. So it is just gaining traction, and we will see more action on that in the next 2 quarters as it rolls out.
On the group side, yes, we have increased our follow-up with the various entities from whom we may have to have premiums to be collected. Plus, we are working with new entities who will be with whom we have been following up for quite some time. We are quite confident of getting back whatever we have been doing in the previous year, showing growth over that by the end of the current year.
Got it. Thank you and all the best.
Thank you.
Thank you. Thank you.
Thank you very much. Ladies and gentlemen, we will take that as the last question. I will now hand the conference over to Mr. Mohanty for closing comments.
So thank you all the analysts because you have given very valuable time during this Dhanteras. So I, on behalf of corporation, I thank you. And as per our commitment, we are moving ahead and definitely will deliver. There may be some dislocation here and there, but overall you will see we will fulfill our commitment. Thank you. All the best.
Thank you very much. On behalf of LIC, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.